How's it going, everyone? It's Sam. I wanted to talk to you today about how I made a few $1,000s, actually $2,000, between Robinhood and M1 Finance during the last stock market crash. And I also wanted to talk about what to do going forward if we're stuck in another stock market crash, and really what not to do, because that is the time where people can lose out on large sums of money. And if you set yourself up well, you can make a lot of money. So we're going to go through my portfolio. Before I do this, if you guys want to use M1 Finance, there is a link down in the description below. I have people that sign up for Robinhood a lot and WeBull, which are both great platforms that have links below too, and you can get some free stocks. But very few people use M1, so try that out, see what you think. But when this whole situation started and the economy went into lockdown, a few weeks before it, I decided to start investing in individual stocks. So before that, I really hadn't invested in anything besides index funds, and I decided that with everything that was going on, there were going to be some stocks that were hit really hard, and a lot of these companies are acting like, or investors are acting like, they're going to go bankrupt. And I just didn't see it in the future. I think that a lot of these companies were staples of the US economy, and I felt like they were going to do just fine in the long term, but they were going to get hurt really bad in the short term. So I started investing in companies that I thought were a good value and had good long-term potential, good balance sheets, but also were being hurt really bad. So I opened up my M1 portfolio and I started investing. So at first I started throwing in $500, $1,000, $500. And back then, it was really easy to get excited about investing because we were having days where the market was dropping 5 to 10%. And this was every day or every other day. So it would go down 5 or 10%, then up 6 or 7%, then down 5 or 10%. And this was happening constantly for several weeks. I wish I had invested more. It's always easy to look back and say that you wish you had invested more, but I invested a good amount. So most of this money here is all new money to the portfolio. I did transfer one portfolio in here, but as we can see here, this part is what was transferred in, and it was about $3,000 worth that I transferred, maybe just short of it. And all these values started over, just so you know. So these aren't correct. These are just from when I transferred my portfolio in. But I have index funds. I have Facebook, Foot Locker, Berkshire Hathaway, some different real estate properties and real estate investment trusts, Tesla, which is one of my newer holdings. I have tons of different companies, and I've been able to show you what I've been buying pretty much every week or every couple days, honestly, and I've made a good amount of money on these. For example, Wynn Resorts, my average cost basis, I just sold some of this and then bought another company with it, but my average share price was only $51, and now it's $92. I had some other companies that did really well too. My biggest holding is Facebook, and I bought a lot of Facebook when it was $151, and then it shot up to about $215, and I just felt like I had to buy more because I felt like it was a great stock. So I started to buy in heavier and heavier as this was all going on, and I just felt really confident that the US was going to get back to where it was, and I had a long-term investment horizon. So then I also started to invest in Robinhood, and this occurred because I wanted to take my stimulus check and I wanted to put it into something that would pay me monthly for the rest of my life, and actually a couple times a month. So I have a video here that I'll show you, but you can click on it if you want. It's about how I made X amount of paychecks from Robinhood and how it's going to pay me for the rest of my life. So that was something where I'm investing in these companies that are, some of them are monthly dividend companies like SPHD. Some of them are just quarterly dividend companies like JP Morgan Chase. I felt like they were still undervalued. I felt like I could make a good amount of money on them, and that they were going to pay me dividends all the time. So like 3 or 4 times a month, actually. I think it's almost weekly that I get paid a paycheck from this. It was pretty fun to do. I showed it, what I did in some of my older videos. You can see here, I haven't made a ton of money from this so far, just because I've had 1 or 2 stocks that have done not great, but most of my stocks were doing quite well, and until the slight little dip that we had this week where we went down 7% in a day. Until then, I was up about 10% in this portfolio, just short of 10%. Now I'm up about 2%. So before we go any further, if you don't mind hitting the like button and hitting the subscribe button, it really helps out the channel. I'll let you get back to it. You can see here, I was doing quite well. I was up about $300. This M1 portfolio, I was up a lot more actually. So funding history, I put about $9,000 in it, and then I also transferred about a $3,000 portfolio. So I was up about $1,600 in one or $200 in the other. And then I also made a couple $100 in like some smaller apps, but they're just smaller, and I transferred out of them. So all in all, about $2,000 I was up. And this one started to grow just because I was actually doing that sub challenge. So if you're one of my earlier subscribers, I was doing $5 in one of these portfolios for each new subscriber. And I was just going from 86 subscribers to 1,000. So just over $4,500. And that happened really quick, honestly. That happened in about 6 weeks, less than 6 weeks, somewhere around there. So I invested a lot of money very quickly and put it into these companies. Now, you might be asking,
well, what does it matter? What's the point of dividends because it's such a small amount?
Really, in this portfolio, if we look at research, and I wasn't even trying to make this like a dividend portfolio. I kind of did because there are some high dividend payers, but several companies don't pay any dividends. The dividend yield is about 2.6%, which is not high for a dividend portfolio. But like I said, I have companies like Facebook that don't pay any dividends. S&P 500 ETF barely pays dividends. I think they pay 1.5 to 2% or something like that. Berkshire Hathaway does not pay dividends. Tesla does not provide dividends. And Disney cut their dividends. Some of these other companies cut dividends. So we're looking at 2.6 or 2.7% yield. And the majority of these companies have cut their dividends or just diminished them. So I think we could be up around 3.25% pretty easily, not changing up the portfolio at all once these companies start bringing them back, once they are able to open and conduct business. So in that case, I'm gonna make a significant amount. So what I make now is about $370 worth of annual dividends on this portfolio. And then once they bring them back, I think 3.25%, so about $440 on this portfolio. And then Robinhood's the same way. A lot of this is actually more geared to dividends. As you can see here, SPHD pays a dividend, Income Realty or Realty Income pays a dividend, JP Morgan does. But I do have Tesla, I do have Facebook, I do have Disney. I have some other companies in here that don't really pay high dividends or don't pay dividends at all. And I'm thinking this portfolio doesn't show you what you get paid in dividends, but I'm thinking it's closer to 3 to 3.5%. But in that case, that's another $100 throughout the year in annual dividends. So between these two portfolios, just me adding these to my investments, I am going to make about $40 a month in dividend income. Now, this will tick up over time and it will continue to increase because I have 20 to 30 companies in here that are all trying to make profits and are all trying to grow. So they're naturally just going to pay out more dividends over time. That's what happens. And I'm not afraid of one company cutting dividends because I have so many good companies in here. I think that this will continue to grow over time. I've been able to get nice capital appreciation, but also like I said, I'm getting paid $40 a month in dividends. It's going to be closer to $50 a month once some of these companies bring it back. And I am only 24 years old right now. Let's say I retire at 64 or 65. With how much I have in just those two accounts right now, I have almost $17,000. Even just at an 8% rate of return with $40 contributions. So this is assuming that the dividends are reinvested and then we make 8% return on top of that. That is a significant amount of money there. So $494,000, $500,000 just because of what I've done over the last couple months. That's amazing. Even if you count the dividends in that 8% rate of return, it's still $366,000. So that's an awesome amount of money. And now comes the point where we talk about what to do if the stock market crashes again. And I'm talking about this, I said that I was going to talk about it earlier, but I think that it's really important to make sure that you know what you're going to do going into it, because a lot of the time it can be a very stressful time if you don't have a plan set in place. First of all, we have really high unemployment right now. So we don't know when that's going to go down, but it's at record highs and it shot up very quickly. The Fed just released information that freaked out the whole economy, and really this last week the stock market dropped 7% in one day. We also don't know whether cases will start back up when we start reopening, and people are worried about that. It's shown signs of doing that over the last couple weeks, so that's something to take into consideration. There's also social unrest. There's also signs of deflation instead of inflation, which is even worse than inflation. So this is a time where a lot of people could be thinking that we're going to go into a stock market crash, and I'm not going to say whether we are or we aren't, but I'm going to tell you there are a couple things that you should do to get ready for that. So the number one thing, if we go into the stock market crash, don't panic sell. So a lot of you guys know this. A lot of you guys are wise investors, but don't go in, freak out, and start selling stuff. So of course, if there's something where a company comes out with terrible news, like they're gonna go bankrupt, or something else where you just don't think that they can ever recover from it, I would sell, because you have to cut your losses eventually without letting the company go completely bankrupt. But if you are going in there and you think, oh, well, Tesla's not going to make money this year, so I'm going to sell them, or Facebook seems a little bit overvalued, or I want to shift some money around, that can cause some issues. Or if you're just going to all cash, once we crash, don't go to all cash, because that is the time to be buying more. So we never know what's going to happen next, but I am a firm believer you should stay invested for the most part all the time, because we've had really bad news over the last couple months, and if you sat this out, you missed out on 30 to 50% gains. So that's something to take into consideration. The other thing is, I wouldn't be shoveling all your money into investments right now. If you're sitting around and you have just a really small amount in your checking account because you keep on buying stocks and buying different spec plays, I would be careful. I like to hold some cash when I am investing. Part of that is just because I'm saving up to buy a home too, so I have some sitting around. But if you don't have 10% cash, I would start holding on to some cash just in case there are opportunities out there. The other thing is, make sure that if your job is not like a steady job, if you don't know whether you're going to have it or not, hold on to some extra cash. So if you get fired or you get laid off or furloughed and they stop giving the extra bonus for unemployment, I'd want some cash, because if the stock market goes down, first of all, I want cash just for my living expenses and to have a little cushion there. But if the stock market goes down 50%, you're going to be kicking yourself that you don't have money to buy. So that's another thing to take into consideration. The other thing is, if you are investing now and you want to keep on investing, which I'm doing right now, I continue to invest, I'd be buying companies that can take advantage of the stock market crash in the future. So think of companies like Berkshire Hathaway. They hold $130 billion in cash. If we go through another kind of shutdown, or if we go through any kind of hard times, especially if the government stops handing out money, just hand over fist, Berkshire will be able to buy some nice companies or some nice stakes in companies, and they're going to do quite well. I wouldn't be worried about the fact that they sold off the airlines or anything like that. They sold a very small amount of their portfolio. I think it works out to be like 0.1% of their portfolio or something like that. So it's really insignificant. That's not something that I'd worry about, but think of companies like Berkshire, think of companies like Facebook. Facebook would do pretty well because more people are going to use their platform, and sure, the ad rates are going to go down in the short term because companies don't have as much money to advertise on their website. But think about the market share that they will grow. Think about how many people are joining Facebook because they have nothing else to do because they're fired or furloughed. Those people and those users are going to continue to use the platform once they go back. Think of companies like that. Think of oil tankers, companies that can take advantage of really low demand for oil and high supply. Those are the companies that I like to buy right now, and those are the companies that I think you should buy. Of course, I'm not a financial advisor. I'm just a guy that wants to help you on your financial journey, grow wealth, grow your earnings, and invest wisely. So I appreciate it, guys. Thank you for watching the video, and thank you for subscribing and liking the video. I will see you in the next one, and let me know down below, what do you think about this? Are we going for another stock market crash? I appreciate it, and I will see you in the next one. Bye.